Shit, nervous. How you going, everyone? I'm making these videos for some family, but I'm putting them up on YouTube, and hopefully some other people get a bit of use out of them as well. A bit about me, not necessarily why you should listen to me, but I do have a bit of experience. I've been in crypto and trading crypto since 2017. Not a long time compared to others, but it's enough that I've been around and seen what happens. I'm making these videos just as a basics to TA and how to trade, because there'll be a lot of people out there now that have made some money and think they can leave their jobs and trade full time, but there's some things you should know first. This should be a 9 or 10 video series on just basics to TA and what I feel that everyone should know, and the last video it will have two different trading strategies in there that I use to make money. So hopefully you watch it all and you take it all in and it's helpful for you. Sweet. So the first lesson, and I believe it should be on any course that you do for anything, is risk management and how to make money training. Pretty much risk management lets you stop your losers before it wipes out your account, and it lets your winners run to either your targets or take profits, or even further depending on what strategy you use. Why you use it is so you don't liquidate your account or lose all your money. Up on your screen here is how to calculate your risk management manually. Now I'll explain it a bit in depth here. So this is just something I've made on Excel to help me do it quickly if I do not have the TradingView position size calculator up, or I'm farting about doing something else. So first we want to identify how much of our portfolio, our trading account or the account for that exchange, you're willing to risk. So how much you're willing to lose if you're wrong on the trade. A great rule of thumb, especially for beginners, is 1% and below, until you know you have a trading strategy that works. So risk percentage here and there is 1%. We're saying we have a trading account or portfolio value of $10,000. So 1% of $10,000 over here gives you $100. So you're risking $100 per trade. If you're wrong, you lose 100. If you're right and it goes to your targets, you get whatever your targets were going to be, which we'll look into a bit later in the video. So how to calculate how much the cash value of your trade should be. You have your portfolio, the cash capital value here, 10,000. We have our percentage that we're willing to lose out of that 10,000 if we're wrong. It's 1%. And we have our percentage to the stop loss. So the current percentage from price where you're entering to where you think you're wrong on the trade and you want to get out. That's your stop loss. You always trade with a stop loss. If you don't, you might be doing mean reversion trading, and it's not for me. You might be dollar cost averaging down or up into a trade. Again, not for me. I like to know where I'm wrong, and I like to get out and limit the money I lose. So percentage to stop loss, which I'll show you how to find, is 2.24%, and it gives us a value. So from our $10,000 portfolio, we are allowed to use $4,464.25 on that trade, and we can buy that value in Bitcoin or whatever it is you're trading, and as long as we have a stop loss, we're only ever going to lose $100. Alright, that risk percentage is also called your R. So over here I've broken it down. Your risk per trade is your trading account times your risk percentage divided by your percentage to stop loss. Over here I've broken down this top one, 10,000 times 1% divided by 2.24%, breaks it down further, and you end up with that number there. Now if you're going to trade coin to coin, so Bitcoin to Ethereum, whatever, there's just an extra step you have to put in, and your amount per contract. So you divide how many, how much that Ethereum is worth Bitcoin at the end, and it will give you the number of coins you can buy. So that would just look like, actually here you can see it broken down, H14. So you would divide, work out that number again, and then divide it by 58.19, and it would give you the amount of contracts to take. I do not trade coin to coin. I trade US dollar to coin. So I just use cash to coin up here. It's much easier for me. And the reasons why will be, I'll talk about it now actually. So I do believe in crypto. I think that there will be a coin or asset that comes along that will be the new world standard in trade as everything opens up. But I do not think it is here yet. So why would I try to acquire something that doesn't work in that way when the dollar is still king? So I trade to maximize my US dollars to buy more crypto when it's down. It's my trading philosophy. Everyone's different, but that's how I work. What's next? So easy way to do this on TradingView. It's a free website. Anyone can use it. You can make an account and pay for it to get extra features, but anyone can use it. And it is this tool here on the right. A long position and a short position. Short position gives us these green and red boxes. You can change the settings if you like different colors. Stick to the basics for me. This is a short position. I'll get rid of it. We open up a long position. It gives us our stop. Our stop area is the red box. It gives us our profit area as the green box. Right now, if we were to take a trade, we are at a risk reward ratio of 1. So I'm risking $100 to get $100. You can do it, and it requires back testing of your strategies to see if that works out for you. I wouldn't personally take that trade. I want a trade that is at least 1.5 to 2 risk reward. So I'm risking $100 on a $10,000 account to get $200. Okay. The easy way to see how much you should risk per trade is in the settings. Up here. So change your account size here to 10,000. A lot size doesn't really matter. Risk, you're risking 1%. Okay. It tells you here how much to buy. It's telling me to buy 0.004 Bitcoin versus the US dollar. If I make the stop a lot smaller and tighter, it's telling me I can buy 0.029 Bitcoin versus the US dollar, and I'm still only risking $100 per trade. So I have a stop that's a lot tighter. I can buy more Bitcoin, but my loss, if I'm wrong, is still only $100. If I have a stop that's a lot wider, my loss is still only $100 if I'm wrong, but I can't buy as much Bitcoin. And I need, for my rules, yours might be different, I need my take profit area a lot bigger. That's a massive move, alright? That's huge. Can happen, especially on a swing trade, but we want to maximize the money we can make while minimizing the money we lose. That's the game. That's the game of trading. So how do we do that? We get tighter stops, right? So we're still only losing $100 if the price goes down there, and we maximize our take profit targets. So I use support and resistance to pretty much pick my levels of where I'm going to enter and where I'm wrong and where I'm taking profit. So I want to enter as close to possible as where I'm wrong, so my stops are very tight, so I can get a big position. So if I'm risking $100 per trade, on this trade here, I make $318 minus fees on there, okay? If I enter this trade here, I'm still only losing $100, but I'm only going to make $111 minus fees. It doesn't. You want your $100 to go as far as possible. All right, you want to make it economical. So that is a position size calculator on TradingView. There is a long. Follow the cursor, the arrow there, a long position and a short position there. Short position works the same way, it's just that you are shorting the market. So you're saying the price is going to go down if you're short the market. So again, you adjust your stop, gives you the quantity you should buy, gives you your risk reward ratio or your R ratio, okay? And yeah, that's your targets. So I'm not showing you any charts. I'm just going over your risk reward today and how to calculate it and how much money you're going to lose. All right. That brings me to my next point, which is instead of thinking of percentage move like an investor would, like your return on investment of, you know, your $10,000 is 5%. I want you to start thinking about it as R. So this number, the risk reward number. Your risk is $100 on a 1%, okay, and your reward is 3.25. So that is an R ratio, risk ratio of 3.25. Now, if you get a really good strategy or you're feeling really good about the trade and you want to increase your percentage of risk, so your total loss, if you're wrong on the trade, to maybe 2%, your R ratio stays the same. You're still at 3.25, but your profits double because you're risking double the money. So if we go into there, we change our risk to 2%. Well, not 12, that's a bit much. So notice the risk reward still stays the same, the R ratio still stays the same, but we are risking $200. So every R ratio that goes up, you're getting $200. You're risking 200 if you lose 200 if it goes below this red box, you'll stop, but you're getting over 600 when it goes up here. So your R ratio is the same. You want to track the R ratios of your trades and which ones play out better, and up the risk percentage on the ones that are winning better. It's a lot to take in, so go over the video a couple of times if you need to. And now some general rules to follow so you don't lose all your money trading. Bigger time frames, hourly, 4 hourly, daily, will give you clearer indication of direction and better signals of trades. Below that, you're looking at half hour, 15 minute, 5 minute. You don't want to be risking 1% on that. Like you could get 5 or 6 15-minute trades on the one asset in the day, and if you're wrong on 5 out of 6 of those, you've just lost $500. So now your account's down to 9,500, and you have to go in and change your account size to 9,500. So now you're only risking, on a 1% trade, $95 per trade. Okay, but on a daily time frame, you might only get a signal once a week or so, depending on what your strategy is. So you can afford to risk the 1%, 2% on that. Rules to follow for me is, if I have more than 4 losing trades in a row, I pretty much half my risk. So instead of risking 1%, I'll risk 0.5% until I get back on track and make some money back. I can do that because I target at least a 2R ratio on my wins. So I'm looking for at least to double my money. Alright, and you don't want a revenge trade. If you have a trade that goes the wrong way, you don't want to think on the next one, I have to make that money back. No, each trade is different, has its own take profits, set rules. You can come up with any rules you want. Maybe you only want to risk 0.2% per trade, so $20 on a $10,000 account. It's going to take you a long time to make some money, but that might be you. Maybe that's a good rule to have when you're first learning. Maybe 0.01 to 0.02% on your account. Just the R ratio is important, and to track your trades, you need to have a trade journal. I'll show you how to make one, and what you should track and what you need to track for tax and everything like that. So yes, investing and trading are not the same. Some trading methods can be used in investing, and some investing methods can be used in trading. Trading is not about accumulating a portfolio. Trading is about building your dollar value. So if you just want to buy and hold coins, that's an investing strategy. If you want to trade to make money, that's a trading mindset. You need to have different things going on. Alright, this is long enough. Any questions, hit me up. Oh yeah, like and subscribe. Fuck, that felt weird. Alright, have a good one, guys.